Hey there, Brad Castro from GreatOptionTradingStrategies.com. I've been taking off and landing, but this airport's closed, and how much thicker this fog is going to get, God only knows. That's from John Hyde's classic 1993 song, Buffalo River Home. Now, when it comes to selling puts or covered calls for income on airline stocks, yes, the airport can definitely be closed from time to time, and the sky isn't always clear. But when conditions are just right, airline stocks are one of the best option selling vehicles out there. I actually covered this topic in a video last year, why I love selling puts on airline stocks, and detailed the 4 reasons why these can be such great trading candidates. As always, I've got a lot of option selling resources for you in the description section below, including today a link to that earlier video, and I'll also link to it at the end of today's video. And there's also a link down there to the growing downloadable option trading library over on the Great Option Trading Strategies website. Whether you're new or relatively new to option selling, or a seasoned trader, or whether you're in retirement, nearing retirement, or starting to think and plan for retirement, there are going to be resources you want to check out. But for today, I wanted to reiterate and double down on the topic of selling options on airline stocks because it's just as relevant today as it was when I first posted the video. In fact, we actually just closed another winning put selling trade on an airline stock earlier this week, this time on United Airlines. Now, we definitely got a nice break on Wednesday when the stock gapped higher, but the trade was already in great shape. As a result, we were able to exit the position, set to expire next week, and lock in the bulk of our max potential gains ahead of schedule. And that nearly doubled our final annualized ROI on the trade to 69.87% over 6 days. And that's versus the original projected terms, which were already pretty generous at 36.24% annualized over 15 days. This week's exit also represented the 5th time we've traded an airline stock as an official leveraged investing club trade over the last 16 months or so. So of the 63 trades we've closed from January 2025 through the first week of May 2026, all of them were winners, with 92% of them at this point producing double-digit or triple-digit annualized returns. And just under 8% of those 63 trades we've closed involved airline stocks, which is a pretty good representation. And not to bombard you with numbers, but 4 of the 5 airline stock trades have produced phenomenal annualized returns, as you can see here, including 2 trades that generated annualized ROIs above 100%. Incidentally, if you'd like to periodically see actual leveraged investing club trades in real time, not just after the fact, be sure you're signed up for my free daily option tips and insights newsletter. Because recently, I've started including daily tips readers on the occasional club trade. That includes sharing a PDF version of the trade write-up right after I put it together and post it for Leveraged Investing Club members. I call these open house trades, and it's a great way for non-club members to get a glimpse into the Leveraged Investing Club, our trading approach, and to see firsthand how effective and profitable our approach can be. And in addition to the original trade idea, usually posted over a weekend, I also include daily tips readers when I send out real-time trade alerts, which I do when I enter the trade, roll or adjust the trade, or exit the trade. And then the fun part. After the trade has been closed, I put together a full case study that includes the original write-up, all the trading activity, and a breakdown of what I feel are the most important lessons or insights the trade has to teach or reinforce in us. I actually just shared my second open house trade with daily tips readers this week. And the first trade, which we closed a couple weeks back, was a pretty successful trade, even though it did require some minor trade repair. It was a 65-day put selling trade on T. Rowe Price that gave us a very nice 20.06% annualized ROI. There's a link below to download the full 12-page case study on that trade. And I also covered the trade and the whole Leveraged Investing Club open house trade process in my last video, and there's a link to that as well. Now, getting back to those airline stock trades, as you can probably surmise, the super high annualized ROIs on these trades are partly because of their shorter durations. But those shorter holding periods are actually a sign of just how successful the trade was. In general, when setting up a new trade, our target duration is usually somewhere in the 3-week to 45-day period. So when we can exit a trade in a week or less, it's because the stock moved significantly in our favor, so that we're then able to lock in a majority of the max potential gains in an abbreviated holding period. Now, regarding the earlier airline video, and again, I've linked to that in the description and at the end of today's video, but as I said, there are 4 reasons why I love selling puts on airline stocks. This is all fleshed out in the earlier video, of course, but the quick version is, first, they almost always have nice, attractive option pricing, which means the payouts are very good. Second, the perpetually above average implied volatility levels also make trade repairs, when one of these trades moves against you, much easier. Third, airline stocks tend to zig and zag a lot, but at the end of the day, they don't really go anywhere. Wherever they're trading is probably at a level that they've traded in the past. And that too makes trade repair easier, as it's less likely that the underlying share price is going to move too far away from you. And fourth, the options on airline stocks tend to be trader friendly in terms of volume, liquidity, share price, efficient pricing, strike price increments, etc. Trading airline stocks in 2026. Now, funny thing is that even though I did put together that video specifically advocating selling puts or covered calls for income on airline stocks, and even though about 8% of the stocks we've closed inside the leveraged investing club last year and this year did involve airline stocks, which again is a pretty good number of trades, I haven't actually been all that intentional about it. But after reviewing the performance of what we've traded, I'm probably going to start being more proactive going forward. I'm definitely not advocating blindly or mechanically selling options on airline stocks. I think you definitely want attractive setups, and we strive to avoid earnings releases when entering any new trades. So it's not like you can sell options on one of these stocks anytime you want. But still, I think I'm going to keep a closer tab on these stocks in the future. Okay, a couple other points to wrap up here. So what stocks in the airline sector are the best stocks to trade? As you can see from our trading history over the last 16 months or so, we've mostly sold puts on Delta. We've only had one position involving United Airlines. I actually like both tickers, and I used to trade United Airlines more frequently than Delta. And they are frequently interchangeable, so I'm happy to go with whatever stock is giving me a better technical setup or where the payout is better. But keep in mind that on a fundamental or operational basis, Delta caters more toward business and first class, and that can be a lot more resilient. I do tend to avoid American Airlines. The nominal share price there is just too low, and in my view, the lower the share price, the less efficient selling options and managing those positions are. We have traded Southwest in the past, but it's been a while. I think it's a perfectly valid put-selling candidate, but for whatever reason, I tend to gravitate towards Delta and United. Alaska Airlines is borderline. With a market cap of less than $5 billion at the time I'm putting together this video, it's probably not the best candidate to be an official club trade, especially since the charts of its much larger counterparts are probably going to be pretty similar, and there's going to be more liquidity and volume and probably tighter bid-ask spreads with those stocks. Similar dynamics with other smaller and regional airline stocks. Okay, last point here is that I also like airline stocks for more bearish option selling trades, i.e. bear call spreads or vertical call spreads or naked calls if you're experienced and comfortable doing that. True, all the examples I've been talking about today involve selling out of the money puts at or below a proven support level, and a covered call for income version could be replicated via an in the money buy right covered call at the same strike price. I've actually put together a deep dive video showing how cash secured puts and covered calls at the same strike price and expiration are 98% the same trade. And you can find a link to that video in the description. But the same 4 reasons why I like selling puts or covered calls for income on airline stocks when the near-term downside seems very limited also make them excellent candidates for bear call spreads when the near-term upside seems very limited, like when they're hitting and pulling back from a technical resistance level. In fact, just ahead of the US attack on Iran back at the end of February, I'd put together a bear call spread trade idea on United Airlines over the weekend for the following Monday morning. But then the attack commenced and airline stocks gapped lower when the market opened and the opportunity was gone. But the point is that we have traded both sides of airline stocks, and for the reasons mentioned earlier, they really are a good category stocks for option sellers. And now after putting together this video, I kind of want to trade them even more. Okay, if you enjoyed this and want more option selling resources, be sure to check out the channel's other videos and playlists and subscribe. The channel is really starting to gain traction here, and we recently hit the 1,000 subscriber milestone, and I've got a lot more option trading videos in the works. And as I mentioned, there's also a link below to download the full 12-page case study on today's T-Row price trade, so you can check out everything in more detail and keep it as a permanent resource and reference guide. Also, sign up for the Daily Tips newsletter via the pinned comment below. The newsletter is a tremendous option selling resource and really complements the YouTube channel, as some topics are better suited in article format and some are better suited in video format. Both resources are all about hedge you win, tells Mr. Market loses, so the newsletter is a resource you're going to want. You can sign up directly, or there's also a link in the description section below to the Great Option Trading Strategies downloadable library page. Download anything from there, and you'll also begin receiving the Daily Tips newsletter automatically. Or same thing if you download the T-Row case study PDF. Hedge you win, tells Mr. Market loses. Let me help you come out ahead on virtually all of your trades. Okay, until next time.